What's up, everybody? Stocks by the numbers. Welcome back. Wanted to do a quick update here on a couple of the stocks that we were looking at after earnings. Mara, actually, it's funny. I was looking and I was like, "Oh, is this like an inverse Head and Shoulders here almost?" But the stock ended up. Wait, hold on. Where was I here? There we go. Right. So potential, not really, but anyway, stock running up now. Mara comes out with earnings as we see here. Nice beat on the EPS side and nice beat on the revenue side as well, which in my opinion is more key for this company here. Estimates of 148.837 million. The company posts 156.8 million. Very nice beat for Mara as we see the stock currently down 9%. They said that Bitcoin production is up. As you see, 2023 Bitcoin production increased a couple of 100% here, up to 12,852, which I pulled up the calculator before at around 60,000. You're talking, like 770 million or something like that. So pretty impressive, I must say. And even though a lot of these numbers are up, talking about the Bitcoin production, in my opinion, I just think in my opinion, I think Wall Street felt it was too high. That's what I mean. Again, now we're talking about a $7 billion company that just brought in 156 million. Now again, it doesn't always work like that, of course. That's just my opinion. That's just one of the ways that I look at it. But I'm not seeing any guidance or anything for this stock. And in my opinion, it may just be down because it was too high. I will potentially try to update if I find out more, but seems like it's trying to make a little bit of a comeback now. So we'll see what happens. But again, even if it opens down 7, 8%, if Bitcoin keeps climbing, you and I both know that everyone's probably going to jump on and ride it back up with Bitcoin. But again, that's basically what I was saying. The stock is up from like 7 and hit like 34, 35 just recently. It's up several hundred percentage points. And granted, I understand their production is up, but it's just, in my opinion, not in line with this current valuation. So even after a beat, we see the stock taking a hit. The next stock we looked at was Snowflake. In my opinion, I said kind of a similar situation here, that the stock was just tremendously overvalued. We saw for the previous year the company brought in about 2 billion in revenue, and the market cap was up here 75, 76 billion, with them still losing money. Rising on the EPS side here, estimates of 22 cents. And this is showing 18.2. Company reported 35 cents a share, beating on the revenue side, posting 774.69 million on 760.432 million estimates. However, yeah, right. I spoke. Yeah, 500 million, lost 200 million, 700 million, lost 200 million. But what the company said was they okay, where is it? Yeah, revenue retention rate 131%. A lot of good numbers, a lot of good numbers, just too high in my opinion, too high. I was expecting a pullback to the low 200s. Stock's down, over 20%. I don't know if I was honestly expecting a move like that, but that one seems to be working out as predicted. Not trying to boast, not patting myself on the back. All right. It showed it showed guidance. It showed guidance. Here we go. Snowflake forecasts first quarter product revenue below Wall Street estimates on Wednesday on expectations that customers would cut back on spending in an uncertain economy, sending its shares plunging more than 24%. Okay, new guy, chief executive, very nice. Spending on cloud and technology is expected to slow down as clients grapple with high interest rates and sticky inflation in an uncertain economy, hitting firms such as Snowflake. Yep. So as you see, forecasting revenue between 745 and 750 million. below analyst average estimates of 765 million. And again, that's product revenue, and they're telling you product revenue accounts for 95% of its total revenue. So if that's going to take a hit, you know what I mean, then the stock takes a hit. But good beat on the EPS side, and technically beat on the revenue side as well, with a nice healthy quarter there, kind of consistently showing that growth. Again, last quarter 734 million. Now they post 774 million, 40 million increase quarter over quarter. So again, I did say it looked good. I just said I would wait for a pullback, and I would wait for a more attractive price. And now you have it, right? So we can keep an eye on that one and see what happens. CRM, I was looking at this before. CRM initially, as you see, dropped down. It was down like 4.5%, was slowly starting to climb back up. And I said that in my opinion, I felt that it was much more positive than it was negative. And again, I understand we had that initial pullback, but let's get into what's going on. And we can see that I said that in my opinion, the revenue number was potentially going to be the most difficult part. And the revenue, as you see, that was jumped up to that next level above that 9 billion mark. And you can see estimates were pumped up to 9.223 billion, and the company beats that number, posts 9.287 billion. The stock currently running right now, down only about 3.5 points, a little over 1% now. Again, was down over 4.5%. Beat again on the EPS side. And this is the one that I said, in my opinion, even though the PE was high, it was more understandable and even more realistic, right? If we look at this number up here at 30 plus billion for the year, 2023, like I said, we were looking at what, like 35 billion or something like that. The next year, we're looking for like 38 or something. So to have this valuation at 290 really isn't that crazy. But more importantly, not only was it, a decent quarter, but more importantly, issues guidance, starts dividend, ups share buyback. This is why I say, in my opinion, follow the money, follow the revenue, right? Consistently increasing quarter over quarter, year over year, growing like a weed. Now all of a sudden, if you own it, boom, you're getting a dividend. Oh, by the way, we're also buying back stock here at this level. All good signs, in my opinion. All good signs. This is what you would like to see. And obviously, if you've been in CRM for a while, I mean, your original investment is up very nicely. And now on top of it, you're going to get paid a dividend. Revenue was 9.29 billion, up from 838 billion a year ago. Analysts were expecting 922. Company said it expects Q1 adjusted EPS of 237 to 239. Analysts polled are looking for 220. So this company, we mentioned the beats, the consistent beats on the EPS side, and apparently they're letting you know, hey, we're going to keep it going. Salesforce expects Q1 revenue of 9.12 billion to 9.17. Analysts are looking for 9.14 billion. Okay, so we're kind of in that range. Of course, anything can happen 3 months from now. The company says it expects fiscal 25 adjusted EPS of 968 to 976 on revenue of 37.7 to 38 billion. I mean, just look at the rate at which this company is just consistently growing its revenue. Nothing short of spectacular, in my opinion. Analysts surveyed are expecting adjusted EPS 958 on revenue of 38.61 billion. So what they're saying here is that the profitability side is going to come in more than likely above expectations for fiscal 25. However, the revenue may be actually light a little bit. And it's funny because Salesforce also said it increased its share buyback plan by $10 billion and plans to pay a dividend on a quarterly basis going forward. This is not a special dividend. This is now a dividend-paying stock. And it is going to be paid out on a quarterly basis going forward. 40 cents per share, payable April 11th to shareholders of record March 14th. Ex-dividend date, March 14th. the stock was more than 4% lower in extended trading. This is what I'm saying. It was down 4.5%. Now it climbed back. It's only down about 1%. But very interesting. That made me laugh though, right? It's like you're upping your buyback and you're paying the dividend, but also at the same time, it's like, oh yeah, by the way, 2025 might be a little rough. So, it's like you let out that little bit of info while at the same time saying you're going to be buying back more stock. It's just funny the way that works, but excellent news here, in my opinion, on Salesforce. I mean, if I was a long-term holder in this stock for the last several years, and now I'm reading this today, I personally would have a smile on from ear to ear. In my opinion, this is great. This really is great. Driven by double-digit rise in subscription and support revenue, so remain top-line outlook for the year trailed Wall Street estimates. Adjusted per share rose $2.29 during the 3 months, $1.68 a year earlier. 11% revenue. Subscription support revenue gained 12%, while professional services and other fell 9% to $539 million. Okay. Said it expects, yep, fiscal revenue. We're incredibly well positioned to build on our success and capitalize on the massive surge in tech spending expected over the coming years, delivering an unprecedented level of intelligence to our customers as AI transforms every company and industry. Salesforce declared a dividend, marking its first ever payout. Going forward, the company intends to pay a dividend on a quarterly basis, subject to market conditions and board approval. Increase share repurchase program by $10 billion. So, again, I understand also some people may make the argument, well, wait a minute, shouldn't the stock be down because they're spending an extra $10 billion to buy stock? Now they're technically paying out money to shareholders, right? But you have to understand this changes the landscape even more because, yes, high growth tech stock, right? Now it's a dividend paying stock. That changes everything. You have no idea now, in my opinion, how many analysts, how many fund managers may potentially take new positions in Salesforce strictly because they are now paying a dividend. So that changes the landscape, in my opinion, a little bit. And they're still saying, hey, we're going to continue to grow and, be profitable and revenue. Look at this, 37, 38 billion, whatever. In my opinion, phenomenal. And of course, not only are they letting you know what's going to happen, in the next quarter and whatnot, but also more importantly, by declaring the dividend, that basically solidifies them as a stable, concrete company. If they're able to look at the landscape, look at what's going to happen in the growth the next couple of years and say, no, not only could we issue this dividend now, but we can probably consistently pay it moving forward. And, oh yeah, by the way, we see more growth, right? And in my opinion, they probably feel that the stock is, fair valued, even if it dips down a little bit over time. They're now buying $10 billion more worth of their own shares. So, in my opinion, nothing but good signs. CRM now only down a handful of points here, down about 1.5%, staging a nice curl back, and could potentially be viewed as a post with a flag that could potentially pop it back up to that 299 level and bring it flat by the end of the day. AI, as we see here, comes out with a beat here on not only the EPS coming in over 50%, narrowing that loss a little bit, but also beating on the revenue side as well by over $2.25 million, posting $78.4 million on estimates of $76.1 million. Now, the company did issue a lot of positive numbers here. In my opinion, unfortunately, I gotta be stubborn. I have to stick to my guns and say that the stock is still overvalued. Again, a couple of $100 million in revenue for the year. Market cap, well, it was $3.5 billion. Now it's going to be a little bit more, but 3.6, 3.7 billion on a couple of hundred million. All I'm saying is, in my opinion, if markets do decide to correct, we start to sell off, it's going to be stocks like this, as I always say, that are probably going to take the biggest hits. And I would have liked, even on this beat, if the stock maybe remained flat or was only up maybe slightly here, getting to this trend line of about 30 and change. But obviously we broke straight up through it, and could potentially be flagging as well. But in my opinion, I do like the company, and they are forecasting good growth. I would just try to, again, wait for any dips, and I would try to keep my cost as low as possible. And again, not bashing the company. It definitely could be so massive. But again, markets are at all-time highs. I just want you to keep that in mind, not trying to be pessimistic. Markets are at all-time highs, right? So if we start dropping down, this company that's trading, 11, 12 times annual revenue could begin to chunk down. That's all I'm saying. Posted better than expected quarterly results, narrowed its full year revenue forecast range, which was still ahead of Wall Street estimates, sending shares up more than 14% in extended trading. Company now sees 24 revenue between 306 and 310 million, above analyst estimates of 306.1 million. That is phenomenal. If they can actually deliver for the next several quarters and hit above that low range number, which was now, you know what I mean? This estimate is now the bottom of this range. If they can do this, then we're probably going to see continued growth, in my opinion. Previously forecast 295 to 320. So lowered the top end of the range by about 10 million, but increased the bottom of the range by about 11 million. Okay, not too bad, not too bad at all. Businesses have been looking for products that offer generative AI to companies, speaking demands. Moreover, the launch of OpenAI's ChatGPT. For the fourth quarter, it expects revenue between 82 and 86 million compared to analyst estimates of 84.45 million, which technically is slightly above this halfway range mark. So, of course, we know 3 months from now anything can happen. But in my opinion, I said that is the quarter that I would personally be looking for, right? Because now we're taking that next level higher into the 80 plus million mark. And let's see if the company could perform. But again, these estimates were the high 70 millions, and the company ends up beating estimates here. Total revenue for the third quarter came in 78.4 million, above estimates of 76.14 million. Subscription revenue for the quarter was 70.4 million, above estimates of 66.7 million. Smaller net loss, 13 per share, 28 cents a share. Non-GAAP loss widens, revenue rises, shares jump. Net loss, non-GAAP net loss of 13 per diluted share compared with a loss of 6 cents per share a year earlier. So the losses are still there. But I believe, where was the number? I'd see, it's not showing me the number. Hold on, I mentioned it in Discord. Let me see. Okay. AI lost 72.6 million to make that 78.4 million. So technically coming in above expectations, which is a good thing, right? The more narrow loss on the EPS side. But those losses are still there. However, it seems like maybe the loss of 72.6 million to make 78.4 may have been a little bit tighter when compared with the losses that we saw the last couple of quarters. So those numbers could be heading in the right direction. Said it now expects revenue. Yep. Rose 18%. Generating tailwinds. Market interest in adopting AI accelerates. Okay. Yeah, see, the enterprise intelligence And the enterprise artificial intelligence software provider widened its loss to 72.6 million or 60 cents a share for the third quarter from 63.2 million or 57 cents a share a year earlier. So this is what I'm saying. These losses, in my opinion, are still an issue. And again, I understand the company just beat on the EPS and the revenue, so everyone's pumped and the stock's getting a pop here. Understandable. But in my opinion, it may be short-lived. And this is what I'm saying. Again, if the environment of the market hops the fence and we start selling off again, it's going to be something like this that's probably going to drop back down, as I showed earlier, around those low 20s, that 24, that $23 level. So again, I'm not saying a lot of these numbers look good and awesome that again they're beefing up this guidance here, right? Estimates were 30, look, 305.6, 306, 306 to 310. All of these numbers are great. Looks like they're going to report in range, in line, revenue for next quarter. All of it's fantastic. I would just personally, in my opinion, like a more attractive price, but you guys know I'm always honest with you. And AI, this one I got wrong. And even though I felt it was overvalued, didn't matter. Company comes out with a nice beat there. EPS revenue, stock currently still up over 13%. Next stock we were looking at is AMC. AMC down to $4.56, down 43 cents, a little over 8.5% here. Checking the numbers, we are not updated. They beat on the revenue, which I was expecting. AMC CEO expects industry box office to grow by 1 to 2 billion year over year in 25. Well, they better come out with some great movies. Otherwise, that's my biggest concern. I just feel like the movies have been lackluster and almost disappointing in a way. And there's no anticipation, right? I mean, yeah, I know there was Barbie and there was the Oppenheimer movie, but you got these handful of titles many, many years ago. It used to be consistent great titles, and it seemed almost every couple of weeks or at least every month or two, there was a new title where you would hear people saying oh no, this is going to be awesome. I gotta go see this on the big screen. You know what I mean? You don't get that often anymore. And I think that's the problem. So, I mean, listen, kudos to the CEO here, being very optimistic. And obviously, if that happens, that would be phenomenal for AMC. But AMC, again, not beating them up, but I had a feeling they were going to go down. And I just feel again, we're in this rebuilding phase, right? So the stock could, as I said, it could stay down, it could stay flat for a while until a lot of these numbers actually start to increase. I mentioned the debt. The debt is around 9 billion, 9 plus billion, company market cap 1.2 billion. However, I did say they would probably beat on the revenue side, and I said even if they post 1.1 billion, the stock would probably still go down, and that's what we're seeing here. CEO says net debt at year-end 23 below level at start of COVID-19 pandemic. Okay. Q4 adjusted loss narrows, revenue increases, shares fall. Q4 adjusted loss 54 cents per diluted share compared with a loss of $1.40 a year earlier. Okay. 3 analysts expected a loss of 65 cents. Okay, very nice. Revenue in the quarter rose to 1.1 billion from 990. Analysts expected 105 billion. Just a loss. EBITDA attributable to having shown Taylor Swift and Beyonce movies. Yeah, and like I said, now they're coming out with their own candy and whatnot. I don't know if that's gonna really help turn the situation around. That's just my opinion. Praises Beyonce, Taylor Swift concert movies. Might have been a flop if not for Beyonce, Taylor Swift. Delayed slate of movie release from Hollywood strikes last year, which are expected to dent box office returns. Ink deals last year to distribute Taylor Swift and the film by Beyonce. Company said that films together accounted for over 10% of the industry-wide domestic box office in the period. Wow, that's a big chunk. That's a bit, yeah, it is. It is lucky for them that they got those films. Otherwise, it could have been pretty rough here. Our praise has no limit. Yeah, well, of course, because without them, you'd be at $3. It said Hollywood strikes still interrupted momentum in movie theaters post-pandemic recovery. He said industry-wide box office in January-February was down about 45% compared to the same period pre-pandemic. These are big numbers, man. And that's why, again, I know a lot of you may have been involved in this for a while. You may be down big, or you might have gotten in recently. You were expecting, like a big pop here up to like 5 and 6. And listen, you know me. I'm pulling for everybody. I'm pulling for you. But I'm telling you here, looking at some of these numbers here, in my opinion, they got to turn this around. And unfortunately, see, like the CEO's saying here, the Hollywood strikes interrupted the momentum of our recovery, right? So out of his control. That's the old saying is you got to control the controllables, right? But if your business model is reliant on so many other people, it could only be a matter of time before everything gets kind of messed up. And I know people tried to jump down my throat the last time I made the video at like $7, saying that it was going to drop into the 4s and the 3s, which it did. But I know people were saying, oh no, revenue's up. People, they want to go out, they were locked down. They want to go out. It's like, yeah, but that was in 2020, right? And then we go into 21 and then 22 and now we just ended 23. And it's like, where is this recovery? Why hasn't this taken place, right? Now, granted, the company did beat on the revenue side. So we could chalk it up to the fact that, hey, Hollywood dropped the ball here, so hopefully 24 is a much better year than 23. Sounds like it definitely could be. But I don't know. It just seems they need that traffic. They need that foot traffic. Because with the way the stock has been beaten up, and again, the amount of debt that they're holding, I know he said, oh, it's below COVID-19 level. It's still horrendous in my opinion. So if they really want to start eating away at that debt and turn around this company, they need to get people through the door. And 2-3 titles a year. Oh, Barbie and Oppenheimer, and oh yeah, instead of seeing Taylor Swift in concert, you can see her in the movie theater. Like, I just don't know personally if that looks like enough to bring this company out of the basement. That's my opinion. That's my take on it. Again, if you guys, any of you guys who are up on like new movie trailers, right? If there's like some big names, some big movies slated to come out throughout 2024 that could help AMC, let everyone know down in the comments section, because I'm sure everyone, is probably sitting here saying, well, they're probably very upset because the stock is down, right? So if there is any silver lining to this cloud, let us know down in the comments section. I'm not necessarily saying it's like a dead industry or a dying industry, but at the same time, I just, it just seems like these numbers really took a hit, and I don't know. I think it's going to take like some massive movie titles and have this company really start blowing revenue estimates out of the water. Like that's what's going to help the company. That is, in my opinion, the road to success. The company posted a loss of $182,000,083 a share in the quarter, compared with a loss of $287 million or $264 a share a year earlier. So that is a big jump. That is a big difference. So that is definitely heading in the right direction. Expected per share loss of 65 cents. So again, almost maybe a quarter or two behind schedule. You know what I'm saying? So we'll see. We'll see what happens. Revenue rose 12%, 1.1 billion. Company narrower than 70 cents forecast by estimate. Okay. So again, let us know down in the comments section if you know of any big movies coming out, anything that moviegoers should get excited for in 2024. IonQ, I was looking at before, and we can see that it immediately dropped, and then we ran up and spiked to over about 13 and a half, and now we've just fallen all the way back down to 10. And of course, you know what I'm going to say. We should be. We should be, right? Now, first of all, just quick glance here at the numbers. Discord going nuts right now. First glance at the numbers. We have a slight EPS miss here, reporting a very more wider loss than expected, but the company does beat on the revenue side here. Again, estimates, I said, might have been a bad sign that estimates now dipped down below 6 million. Company ends up posting 6.1 million. So nice beat there for IonQ. Again, this quantum computing company, right? And they're talking about some amazing things moving forward. Potential bear flag forming here, actually. We may drop down. I hate when I can't see my numbers. So what is that? 970 we might see. Okay. But basically, the company talking about some bigger and better things here. I looked at some of these numbers before. Again, coming in above expectations. Reported a loss of 20 cents. Missed estimates of 19. 6.7 million new bookings for the fourth quarter. Ended the quarter with 455.9 million in cash equivalents and investments, which sounds like a lot of money, but at the rate at which they're burning, we're talking about only a handful of months. But I believe they're forecasting increases in revenue here. Landmark year, technical goals. Yes, they talk about their algorithmic qubits. And I will be honest, I'm not, 100% up to speed on this, but unveiled designs for upcoming generations. And right here, in my opinion, I think this is the biggest takeaway here. Opened our new Seattle manufacturing facility to begin producing more systems to fulfill our growing pipeline. So able to increase production and increase their efficiency now with the Seattle manufacturing facility. So I'm hoping that the orders continue to come in and IonQ revenue does begin to chunk up, because again, I mentioned in my opinion, the current market cap just overinflated with the amount of money that the company's bringing in. So we need it to come back down to earth. We need it to come down to a more realistic price. And then I'm telling you, everyone's going to pile in and say, okay, it's worth the risk right here at this valuation, and the company's forecasting bigger things. So 5 years from now, this one's going to pay off for me. You know what I'm saying? You guys understand how investors think because you are them. Sees first quarter revenue 6.5 to 7.5 million. Company anticipates full year 24 revenue in range of 37 to 41 million. Right? For the year, 37 to 41 million. And the market cap several billion. You understand what I'm saying? We gotta bring that down, in my opinion. Gotta bring it back down to earth. Full year bookings expected to be between 70 and 90 million. Very nice. IonQ also anticipates an adjusted EBITDA loss of approximately 110.5 million for the year of 24. With the rise of generative AI, we are increasingly hearing from customers about the prohibitively expensive and lengthy compute resources, upwards of $1 billion and 3 months required to train certain large language models. We estimate that to fully simulate 64 algorithmic qubits, you would need 3.6 billion GPUs, and that by shifting AI workloads to our increasingly powerful quantum computers, IonQ can help address the world's next great computing challenge. Like, that's what I mean. It all sounds great, right? But again, in my eyes, if it really was that kick-ass, the revenue would probably be coming in. But again, I understand they just got that facility kind of going. So I'm curious to see what's going on. In my opinion, if you guys want to stay hype about it, I understand quantum computing could be massive. In my opinion, I mean, here at this level, where are we here? 10 and a quarter. So yeah, if this does flag and break, what'd I say? 970. Okay, 970. Yeah, that's what I mean. Where was it last time? This drop came to 923, and then it kept making those lows. But you can see, I called out the symmetrical triangle last time, and you can see even down here at 1025, and that's what I mean. This bottom will be 970 if it breaks. It could very well bounce here and just kind of, stay in the high nines, low tens before hitting that apex. But again, in my opinion, I really think it should break. And I know people are going to get upset, but in my eyes, it really should come to the bottom of this little downward channel here. And if we hit this next trend line, as you see, we're talking sub $6. And that would bring the market cap down to about $1 billion and change. Then we can possibly take another look at it. But again, that's just my opinion. If you're pumped about it, if you're seeing bigger and better things, or if you think the company's going to slowly take over the whole space, let us know down in the comments section. Trying to do this quickly here. Monster, right? We looked at Monster. Monster up 5%. Had a feeling that was going to happen. The company ends up missing by almost 9% on the EPS side, missing by about 1.5% on the revenue side. However, we looked at the forecast and we noticed this is kind of like a trend with Monster, right? But as we're seeing here, revenue rises on international growth. See, this is the thing. This is why a lot of these companies, I'll be honest, a lot of these companies could be difficult to call. And not just energy drink stocks like Monster or, what's the other one? Celsius, but just regular soft drink companies like Pepsi and Coca-Cola, right? Because we don't know exactly, how much of a drop that they're seeing in each demographic, or how much growth necessarily is expected or forecasted. But again, they could forecast one number, but the actual number could be something completely different. And what you're seeing here is that even though revenue dropped here domestically, they're seeing an increase in Europe, I believe they said, driven by international expansion, growth of main energy drinks, alcohol brands. Profit rose to $367 million, 35 cents a share, from $301 million, 29 cents a share, same period a year earlier. Analysts forecasting 43. Revenue climbed 14% to $173 billion, missing expectations of 176. We continue to see sound growth in the energy drink market globally, after sales to customer outside the U.S. increased 17% to 637. 17%. Wild stuff. So this is what I'm saying. This is why, analysts, they're sitting here, they're crunching the numbers, they're looking at the fact, they missed on the EPS, they missed on the revenue. Is this good? Is this bad? What are we doing? Are we buying? Are we selling? But then they're looking at that, and they're saying, no, you know what? 17%. The potential slight drop in domestic revenue will more than likely be outweighed by future growth and expansion internationally. And that's why I think that even though these numbers missed, the stock is up. The stock is up on that international news. But we had a feeling, right? Hold on. Yeah, see, this company growing, just growing consistently. Q4, yeah, see, Q4 last time we had the dip, so they see a slight dip, but yet what they report? 173 is actually higher than what they brought in Q1. And now you see Q1 usually has a bump coming out of Q4, but we're on the up and up, and it was recently 185, 18, right? So now we're going to go back to probably the 18 plus mark, going into Q1 of 24. So gonna have to keep an eye on Monster. But yeah, I said in my opinion, I probably would have been a buyer, and we can see it is up 5%. And last but not least, again, I wanted to do this quick, and I ended up talking for much longer than I wanted to. What we can see here is stem down over a quarter here after hours, about 9.5%. Looking at the numbers, we're seeing a big miss on the top and bottom lines here. Company reporting a wider than expected loss of 24 cents a share on estimates of about 14.5 cents. And we can see also the revenue missed by a chunk, 256.2 million on the estimates. Company brings in 167.4 million. Now, first of all, this was my bottom trend line, as you see, 233. Stock hit a low right here, 235, and then bounced, and then came up to 237, and then bounced. So we have to see if it does touch this bottom trend line here, and then potentially breaks down and goes into the low twos. But let me tell you something. Even though these numbers look bad, in my opinion, I still really like this company. And I'm not just saying that because the video gets views, but it's the increase in revenue that we're seeing, right? So the company well over 400, I think 450 million in change for the year. And if we come down here annually, we can see, look at this, 127, 363, now 450. And this next year, 600 to 700 million is the guidance here for the fiscal year 24. We're talking some big growth here in revenue. Again, they missed, by about 90 million. But the company did say some positive things here. So they achieved key milestone positive adjusted EBITDA in Q4, second half 23. Expected to generate at least $50 million of operating cash flow in 24. Awarded pro contract by Mercuria Energy Trading. Expect to achieve positive adjusted EBITDA 5 and 20 million in 2024. Project at least 50 million in operating cash flow for the full year with no equity issuance. This is what I was saying as everyone was beating up the stock, and we see this with a lot of other names as well, not just STEM. But when we see these companies and they're at like the $10, $12 level, and they go into these 1-2 year sell-offs, as we start approaching that $3 mark, that $2 mark, everyone starts to get very nervous, because if the company hasn't turned it around by then, it's only a matter of time before we go into the ones, and then we dip sub one, and then you get your letter of compliance, and then you have to do a reverse stock split, and then you just screwed me over. So the company is telling you right now that they're looking to achieve, as they said, positive adjusted EBITDA, at least 50 million in operating cash flow with no equity issuance. In my opinion, green flag. Revenue up 8%. Okay. It seems like, though, with the backlog increasing, I almost want to say that it reminds me of Boeing, like 10, 12 years ago. Boeing would like always go up even if they missed on earnings. And I remember, I was more of a noob at the time, and I remember I was like, what the hell's going on? So I decided to look into the stock a little bit more, right? Do our due diligence. And what did we find out? We found out that they had billions on the backlog, and they were logged until like 2027 or something. And I'm talking 10, 12 years ago. So that's why the backlog could be viewed as a massive positive, even if the company misses earnings on the revenue side, quarter over quarter, or they're sporadic with the beats and the misses, right? Because Wall Street's looking at it saying, yeah, it might have been a rough quarter, but we know the company is going to get X amount of millions or billions, over the next couple of years because of their backlog. So the backlog, I feel like, almost reminds me of Boeing, to where like the company is almost just trying to keep up their production with the amount of orders coming in. You know what I'm saying? So in my opinion, even though, again, big revenue miss, in my opinion, I really view it as a positive, not a negative. This gross margin, I can understand if we want to take it down here. GAAP gross margin of 7%, down from 8% in Q4. Understandable, I guess, if you want to take it and bring it down immediately. But again, 400 million market cap. The company just brought in 167 million for the quarter. So this is what I mean. In my opinion, we may kind of be near the lows of the lows. And even if we do break, again, that's just my personal bottom trend line. But if we do break that trend line, we could potentially drop into the 220s, the 210s. It is possible. But in my opinion, based on what I'm seeing in these numbers, I might be buying like an animal if I had liquidity. Non-GAAP gross margins of 13%, up from 11%. Net loss 37.7 versus net loss of 35.3 this time last year. Again, that may be viewed as a negative. However, they lost an extra 2 million in change, but brought in 12 million more. So not proportionate, right? That's what we always say. Because now if they brought in 12 million but losses increased by 12 million, then we may have a red flag, right? But they didn't. It went up by 2 million, brought in 12 million. Adjusted EBITDA of 4.6 million positive versus a loss of 9.5 million in Q4. Very nice. ended Q4 with 113.6 million in cash, cash equivalents, and short-term investments. So the company just reported revenue of 167 million for the quarter. The company's holding 113 million in cash, and the company has an increasing backlog, but the current valuation of the whole company, you're telling me, is only $400 million. So in my opinion, I still think it is severely undervalued. Revenue of 461.5 million, up from 363 million the year earlier, 27% increase in revenue year over year. In my opinion, follow the money. GAAP gross margin of 1% versus 9% for the full year. That's what I mean. I understand if they want to beat it up because of these gross margins immediately. However, in the long term, I really do think this one's going to pay off, in my opinion. As you see, losses, right? 140 million versus 124 last year. Adjusted EBITDA, 19.5 million loss versus $46 million loss for full year of 22. So more than cut that in half. Bookings, 256 million, down from this time last year, but bookings of 1.53 billion in full year 2023, up from a little over 1 billion, almost 44% increase year over year. Contracted backlog of 1.9 billion at end of Q4 23, up from 969 million at end of Q4 22. Almost a 100% increase in that backlog, now approaching $2 billion for this $400 million company. Contracted storage AUMs, assets under management, of 5.5 gigawatt hours at end of Q4, up from 5 at end of Q3 and 3.1 at end of 22. All of these numbers seem to be increasing, in my opinion, minus the slight dip in that gross margin. Solar monitoring AUM, 27.5 gigawatts, up from 26.3 at end of Q3 and 10% increase at end of 22. Are 91 million, up from 87 million, and 65 million, 39% increase at end of 2022. So, in my opinion, underlying demand for our market remains strong. A solid quarter of bookings drove our contracted backlog near $2 billion for participation in wholesale energy markets. Okay, today I'm pleased to announce our first contract with Mercuria. Very nice. A leading energy trader. Our customers continue to value. We're introducing full year operating outlook. EBITDA between 5 and 20 million. Positive operating cash flow 50 million. We also expect strong growth in revenue, bookings, CAR, and AUM. Finally, we expect to achieve, our plan without needing to issue equity. That, in my opinion, is the biggest takeaway. Yeah, the revenue's been increasing. It's missing, it's beating, but the backlog is huge. We're expecting, some positive operating cash flow. Looking to make a positive EBITDA between 5 and 20 million. And we're able to do this supposedly, quote, without needing to issue equity. And I think they said this at the same time last quarter, too, about 3 months ago, talking about that they're going to be able to do this and make this work without further dilution or something. Don't quote me. I don't remember exactly what they said, but it was something along those lines. And I remember I said basically the same thing. That, in my opinion, is a green flag, not a red flag. Management team and I are deeply focused. 24, extending our technology leadership position, building software services revenue, and profitable growth. So in my opinion, again, even though the stock is taking a hit right now in the immediate short term, I would keep an eye on this trend line here for the technicals. But overall, in my eyes, in the numbers, I think this stock is a screaming buy, honestly. But again, that's just me. That's just my opinion. But let me know down in the comments section how you guys feel about this one. But I'm going to end it there because this is probably an hour-long video. And if you watched this far, thank you so much. And I'm very sorry that I went on and on. But again, I wanted to give a fair shake to, all of the companies that we looked at earlier today. And, sometimes you get out what you put in, right? That's what we always say. You get out what you put in. So I didn't want to just glance at it. I wanted to try to look into some of these companies and what they said, what they were forecasting. But yeah, I'll end it there. So once again, this is Stocks by the Numbers. Thank you guys so much for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me, help you moving forward, win or loss today on any earnings plays or any long-term holds, whether you're upset or not. I just want you to know that I understand that markets are rocky and volatile and uncertain. I want to wish all of you the best. I wish you all nothing but success. Thank you so much for giving me your time, and I want you all to have a good day.